presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
Again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We pick things up at 3:07 p.m. Eastern Time on Tuesday. We're coming into July 4th, July 1st right now. We get a half day on Thursday, but this employment data going to be in focus right now when you have Chairman Powell. So he's out there talking about that they're on hold because of tariffs and inflation, and that should kind of be the case, right? The uncertainty that they're out there. They want to see how things play out. But nonetheless, when he says it, the market reacts. We got yields a little bit higher today with the 10-year at about 4.25, and we have the market, as I come to you, we just traded down almost 20 points from where we were coming into the 2:45 p.m. bar. S&P's right now negative by 6. 62.47. NASDAQ 100 leading the way lower, down almost a full percentage point. You see the acceleration this morning, down to 22,600. We're trading right now off 0.9%. Dow, a leader right now, higher by a full percentage point, up 459 points. And the Russell, up 1.1% right now. Look at the Russell giving it back a little bit with some selling. How about some price and volume? All right, pay attention to that volume because that is a spike, man. You're challenging the lows, and I say that as in across the board right now. Not just the Russell. The S&Ps, you got some volume. You're catching a bounce, though. And yeah, we're looking at 15-minute bars here. Let's break it down to a 10-minute bar on the S&Ps. We only got about, a minute and a half left in that bar. It's going to be the highest volume bar of the day. We'll see if we can get it back. It'll be important to see where this bar finishes. And if we get any follow-through, you get some selling going on. We jump to yields, as I mentioned. And yeah, you get a little bit of a pullback. And there's your pullback right at 10 o'clock. I think that was having to do with the discussion where you got lower price, you get higher yield. We're chopping around there. And let's just jump to the headline. 10-year Treasury yield rises as Powell again says Fed is on hold because of tariffs. Now check out the quote. In effect, we went on hold when we saw the size of the tariffs and essentially all inflation forecasts for the United States went up materially as a consequence of the tariffs. Asked if authorities would have lowered rates again if the U.S. tariffs have not been unveiled, I think that's right. And yeah, then they just get into the fact that, yes, there's been some potential input inflations, okay? And this isn't Chairman Powell. That's the end of his words that seem to move that market. But yeah, July's not happening right now. And when you jump to where the market is pricing in, okay, market only putting it at about a 21% chance that there's a cut on the table for July. Not likely. What's much more interesting is when you go up to September, when it's the other way around. There's only an 8% chance we're right where we are right now by the time we get to that September meeting. And the only question there is whether we're going 1 or 2 by then. Because by the time we get to December, the market's now pricing in 3 cuts. 3 cuts by December. Yeah. The market's pricing in 1, 2, 3, folks. 1, 2, 3. As in September, 72% chance we have 1 cut. October, greater than a 55% chance we have 2 by then. And December, the greatest likelihood falls with 45% being 3 cuts. Now, this number varies greatly. But nonetheless, that's where we are, even with a rise in the yields a bit today. We jump over to the dollar. So as we get yields rising a bit, you have the dollar catching a little bit of a bid to 96.90. We jump over that gold contract. GC. And gold gives back some of the gains, but holding up relatively well. You're up by $42 right now at $33.50 with a little bit of dollar strength on top of that as well. We jump around to some of the tech stocks. Amazon holding up well right now with the NASDAQ getting clobbered. Amazon up by 0.7% at 221, we'll call it. Yeah, Microsoft off by 1.1%. Apple digesting gains still on top of yesterday, up by 1.3. And look at how, you have the NASDAQ 100 down almost a full percentage point. Meanwhile, you got Apple up 1.3%, Amazon up 0.8%. That alone, to be down that much. These other companies, Microsoft off by 1.1%, Google off by 0.6%, Meta off by 2.7%, Tesla 5.3% to the downside, Nvidia 3.2%. AMD 3.9. I mean, we got volatility here, folks. Okay, you better believe it. When you get the biggest company in the world, the volatility for a company that's the biggest company in the world is a dicey scenario, for lack of a better word. Let's take a look at it. Man, we had strong volume last week. These volume numbers last week, man, the way you break above these recent highs, and you do it on 1.33 million. Yeah, I mean, look at this. You did do almost 1.4 the week of November 18th when they had earnings. And then you only did 1 million when you got as high as 153.13, which is actually the technically tail high. That's strong volume no matter what last week on NVIDIA. But yeah, off by $5 today, and NVIDIA has about 25 billion shares outstanding, folks. Billion shares. So what is it talking about? Market cap wise, $125 billion. Not in accounts today that was in there yesterday. You jump to some of the Dow stocks. UNH, how about it? Look at that move. Up by $11.26, up by 3.6% right now. Walmart shares up by 0.5%. Home Depot. And this is where the Dow can just really, you get Home Depot, a stock trading at $373, and you get United Health, a stock trading at $323. Price weighted index, United Health is up by $11. Home Depot is up by $7. That's $18 between those two equities alone, putting into the Dow. Look at Intel up by 2.3% today. All right, we're checking on silver. Yeah, gold and silver both holding up pretty well when you got the dollar. And, we've seen substantial dollar weakness. We are catching a little bit of a bid. You just traded from 96.37 to almost 97. But look at how we trail off coming into the close as well. Right back to 96.75 right now for dollar weakness. And that's with yields pulling back a bit. All right, look where the 10-year is. The 10-year is right where we were last Thursday. Dollar last Thursday was trading above 97. We're at 96.75. All right, folks, stay tuned. We got a treat. We got our man Basil Chapman. He's coming up right now. Basil loves talking Dow. I'm sure we'll ask him what he's thinking of this Dow on a day where we got Dow strength with UNH Home Depot. And then we have Tim Ward coming up at 30 past. So we're coming up with our man Basil Chapman, folks. Don't go away. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We have the S&P's negative by 4, and yeah, this Dow, and shame on me for not even pulling up. You have Amgen, which is up another $12 here. You got Sherwin-Williams. I would say painting it green, man. I mean, all of these equities right now, look at it, up another $12, man. These Dow stocks. Let's get into it. Folks, right now we're going to jump over to our man, Basil Chapman. You can check out Basil's opening call right on the front page at TFNN.com right now, folks. You can see the opening call here. You click on that banner. You can subscribe for 90 days, a month for $149. 6 months for $6.95, you save 22%. A year is $11.95, you save 33%. And like we always say, folks, if you're going to keep it and you're even thinking about it, think about signing up longer term because you get a 30-day money-back guarantee with all of them. Basil Chapman, good afternoon.
Hi, Tommy. How are you?
I'm doing well. You know, Basil, I always think about you on the Dow, and I have to, quite a day for the Dow today. And as I'm jumping through it, I'm saying, my goodness, these stocks in the Dow, I'm looking at the list right now, Basil. Maybe we can start it off there because the Dow is having quite a day today, especially as we get some red in some of the tech equities. But boy, how about this Dow, man?
So one of the things I wanted to talk about today, in fact, I did want to bring up the Dow. The Dow is not, the S&P and the QQQs at all-time highs. The Dow was, just 3 days ago, it was over 1,000 points below, more than 1,000 points below its all-time high. All of a sudden, it's less than 500 points. And one of the reasons why over the years, I've made a daily call on the Dow, maybe for 40 years or something, and I do that for subscribers every day. And the reason why I use the Dow is that the mix of the Dow at this particular point especially really matches so well the economy at any particular stage. So it might lag at times, but the fact is it's got those components that are important. You can see right now that it's doing so well. It's up 464 points. So I have a left side, right side price time match. I didn't even think we'd get there. That comes in early next week where it could test, or it's before early next week. 45,073 will be the target. But at the same time, for subscribers, I've been saying that the last 3-4 days, I'm saying I'm getting a little cautious here because some of the icons that I look at are getting either into leg Ds or they are at all time. We've got 5 or 6 positions in our, I call it a portfolio, but it's the positions that we have long that are at all-time highs or very close to all-time highs. And I'm getting a little nervous about that. So the Dow, the fact that it suddenly came alive today, and it's, in a way, I have to just think of it purely technically and say, well, now it's playing catch-up to the general market, to the S&P and the QQQ. So the fact that you've got this mix, suddenly you've got a biotech, you've got Amgen, you've got Home Depot. This is this is core to the economy. This is really important, and I'll talk about it tomorrow morning in my show at 10 o'clock, the Tiger Technicians Hour. I mentioned that this morning, that all of a sudden I'm looking at a stock like Builder. BLDR is the symbol. Builder's First Source, Materials, Products, Resources, having a fabulous move going to that leg D, but after a huge decline from the 200 area down to 100, cut in half, and now it's coming back. It looks terrible on the monthly chart and the weekly, but look at this daily chart, and I was speaking about this in my show recently about Toll Brothers, that maybe it's telling us something about yields or the anticipation of yields, because it's had from the 200 period moving average at just under 90 a few weeks ago. Here it is at 118. When you look at the big picture, going from the 106, 170 area down to getting cut in half down to 90 and then coming back, that's something. But what I did say to my subscribers is getting a little cautious here. We haven't done anything about it, but we've got, when you're looking at the rotation that I always talk about, and I spoke about it last week, that there's a chance that we're going to start to see a rotation from the real leaders in this particular phase, so that it'll ameliorate any downturn. And the downturn, I think, might come from this beautiful bill that's being passed, maybe passed, but at the same time, you've got something like KRE for the very first time. This is the regional bank, S&P regional bank ETF. I've spoken about this for at least a year and a half now, saying we've got to see the regionals start to move, because the economy doesn't mean much if you don't get the local banks. Well, they're not really local.
Sure.
Some of them are billion-dollar companies, but you want to see that action, and now we're starting to see it. The weekly chart has just broken to a leg B, and that's really the first time we've got that kind of strength. So I'm looking at this rotation going on for subscribers as we're getting into this particular phase. I said, let's not get any new big positions, but we're going to get low price stocks. We were very fortunate. We got one the other day, just a few days ago. It's BBI, Big Bear Holdings. We were very fortunate. We got it at just over 5, and the very next day it sprang to the upside, and it gave us 15%, and then today we took a little bit off at 28% gain. It's in that leg D. I'm always looking at D, and I say that's where other things can happen. But I think this is a period just at the moment that I'm becoming a lot more selective at what I think is going to move for another, I call it a start of another bull market, as some of the real leaders, and I included Microsoft, which went to an all-time high, trading right now down almost 5 points, having hit $500.76. We're in still a small position from 388. So I'm saying
amazing, Basil.
It is amazing, and that's leadership, because look at Apple's done nothing, and look, here's Microsoft becoming a leader, and that's this rotation that I'm talking about. That you've got to be very selective now. But at the same time, the market's broadening out in the sense that it's going to areas that were doing nothing, and now they're starting to show some life. And I like that, because I like rotational corrections, because it allows sectors that are overbought to take a breather, and sectors that were oversold to really start to have a decent rally. So I actually like this particular phase, but it is really difficult, because what you want to do is just lock in and say, oh, I'd love to sell everything right now and then start fresh. But you don't want to do that, because you still want to keep your core positions. So it's going to be a challenge, but I love what we've got now. We've managed it well. We were very fortunate the other day to get another low price stock, that's Taseko Mines. Expecting it, if it broke out from the cup formation, it could go a little higher. We're in a 3. That's at 331 right now.
Ooh, look at that recently.
Yeah. And that weekly chart is in leg C. So I like the action right now. You've often been talking about the copper stocks, and I think that this is a chance. Just what I'm trying to do now is to put less money to work and try to get as much bang for the buck as possible for subscribers, so they are single-digit, very low-price stocks, and trying to conserve some money. So if we do get this, I need to just show you this for 1 second before I run out of time. If we do get some kind of at least a pullback, then we can start to look at stocks that we would like to add more in that we've already got, like a Robinhood, which has been absolutely fantastic. We have a position from the 16s and it's already to date hit 99. But this is what we're looking at. This is the XLF in pink. This is the XLF Financial S&P. In pink. This is the monthly chart, and this is the SPY in blue. And look how it's coordinated. So each one of these turndowns and rallies have coordinated, and here we are. We've just broken to the upside with new highs, and that, I think, is very important looking out for 2025.
That was great stuff, Basil. And yeah, remarkable when you know, home builders, right? Home Depot, Sherwin-Williams. Pretty interesting,
your
the
father,
rotation
Your father used to always say, Sherwin-Williams, the market's green.
They need it, man. Basil, thank you so much. We look forward to the program, 10 o'clock tomorrow. Have a great night, Basil.
Thank you, Tommy.
Thank you. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 2. You see that charge lower at 3 o'clock. We bounce. We're trading at 62.56. And right now, folks, as we do every Tuesday, Thursday at 3:30, we're going to jump over to our man, Tim Ord. You can reach Tim every trading day at his website, ord-oracle.com. And don't forget, right at TFNN.com, under the Services tab, he's got 2 great webinars. 6 secret ratios every trader should know, and some of the ratios Tim's going to talk about. He talks about that SPY VIX and SPX VIX. We'll talk about some of that and the secret science of market tops. Both of those available under the Services tab at TFNN. Tim Ord, good afternoon.
We can see our charts.
Let me make sure we got them, and we they're coming up right now, Tim, but I have them as well. So I think they are, but I'm not sure they're up there just yet. My producer can let me know. But I have them as well always. So we can start if you'd like.
Yeah, okay.
And he's got them up there, so go for it. I see him. Go for it, please. Perfect.
All right. So anyhow, this first chart is the daily SPY. We go back to, looks like about November of 2024. So it's just a gigantic pattern here. But I wanted to show that the bottom window is the SPX VIX ratio, and going into that high of February, the S&Ps were making higher highs. If you notice, the SPX VIX ratio is making lower highs. Then starting in May, actually started in April, but in May to where we are right now, the SPY was making higher highs, and the SPY VIX ratio is making higher highs, and the SPY is making higher highs from May until actually July. But last year, the SPYs was from December to February, that period anyhow, the SPY was making higher highs and the SPX VIX ratio was making a lower highs. So anyhow, what I want to point out, what we got going on right now is everything's bullish here. If the SPY is making higher highs and that SPX VIX ratio was making lower highs, we'd have a bearish divergence. That's not happening. That's the reason why I toned this area in green, and I toned this area here in pink. So that's kind of shows you the difference. But let's look at the weekly charts. We're kind of going to go fast through the S&Ps because we actually broke out. There's not a lot to talk about other than the trends up. So we'll look at the weekly and the monthly SPY. If I want to get over the gold charts, I have quite a few different gold charts, and I want to show you what's really going on the bigger picture. So we'll kind of go quick here.
All right.
This is the SPY weeklies. We closed at a new high above the February high. This is a weekly time frame. Volume came in on the or last week as we broke above the previous highs of February. We did so on 245 million shares. The previous high was 170 million shares. You need to break a high on at least equal volume, preferably higher. And here we have obviously a lot higher volume. So that's a valid breakout. So if you break out to the upside, then support comes into the previous high. The previous high is actually closer to 608. I put 607 there. This is on the SPY. But anyhow, in that vicinity, it may rally up, come back down to it, and we think that's probably a good idea, or that's probably going to happen between now and September, probably, because we'll rally up here. The rally's still going strong, so I don't think we've seen a high of any consequence right now, but that may develop later in July. We'll have to see. But now we have support at 608 area, give or take. But let's look at the monthlies real quick. Monthlies kind of same thing. We talked about the railroad track thing. There's a big down day back in that was March of this year, made a bottom in April. Then he had a big upswing in May. The price pattern was about the same. This one's price pattern down, was about equal to the price pattern up. The volume was basically also equal. Kind of a parallel thing, straight down, straight back up on equal volume, about basically equal price. That's called the railroad tracks. And those come at reversals, and that's what happened off that low. And now we broke above the February high on the monthly time frames. Volume came in June this year, 127 billion shares. Back in February, it was 803 billion. So we broke above and closed above the previous high. So now the previous high becomes support, which is on the monthly, it looks like about 610 area, give or take. This is on the SPY. So trends up, supports around 610, give or take. Uptrends intact, breakout confirmed on the weekly and monthly. So nothing really to talk about other than we're going to go higher.
We're rocking and rolling, right? Totally, man.
Yeah, we're
totally.
rocking and rolling. We got everything.
We are. This market. Totally, man.
Right. So yeah, we confirmed on the weekly and monthly. So this is not like a short-term high. There'll be some short-term highs here, but we probably won't see much below 610 the rest of the year. I'll put it that way. So that's that. Let's get to the gold issues.
Let's do it.
This is the XAU updated today. You get the RSI up around 70, above 70. Usually you're at a high. This chart goes back to a long ways. Let me get a drawing tool here. But this chart goes.
Yeah, 88.
1988. For some reason, it's not drawing. Oh, well. Yeah, it goes back to 1988. So every time here you kind of consolidated and went down, went up. But anyhow, they all marked basically not significant highs. I think the worst case scenario for us, we broke above a head and shoulders bottom. I think support's going to be around 5. This is on the XAU monthly, around 575. That's probably going to take a little while to get there. It's not going to be like next week or anything. It's probably going to be September, October. Could be later, but it's going to take its time going down. But this is the XAU and actually GDX. Let's go to the next chart, GDX. These are big charts, or these are the XAU, GDX. Those stocks and those indexes are big. They're not the little ones. Yeah, and that's what I want to talk about today. Here's GDX. We tested the high here of 1st of June, 2nd of June, tested that high. You can see the volume really dropped down compared to the first week in June. And now you broke below the previous low of this low. And if you notice, the volume increased, not a lot, but it didn't have to. It just has to be equal or greater. And it did that. So it's trying to rally right now. That rally's not going to go anywhere. But we're probably going to go back down at minimum to here, which is around 45 on GDX. And I don't think that we're actually going to go out here to the music. So
no, hang right there, Tim, if you can. All right, and folks, we're going to come back. We're going to talk some gold. I know Tim, he's got some equities in there as well with some of his charts. We'll be right back with Tim, and we're going to talk some gold. Stay tuned, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's right now, right near where we're talking about negative by 1 point on the futures. 62.52, NASDAQ 100 in the red, Dow plowing higher, and the Russell up by about 1% as well. We're talking to our man Tim Ord. Don't forget, folks, you can reach Tim at his website, ord-oracle.com, and a couple of great webinars under the services tab at TFNN, and we're talking a little bit of gold right now. All right, Tim, go for it. I see your GDX still up there, please.
All right, GDX, this is the weekly chart. In general, we're at least going to go to 45. I think we're probably going to go to 40. Time frames kind of, I don't really have a time frame right now, but this is just a pullback at an uptrend, so it's not something to fret about. But the big ones are going to pull back, and this is one of the big ones. This is AEM. That's the symbol anyhow.
Yes.
This is a monthly chart. This chart goes back to actually 2006, and if you notice, it's a gigantic breakout. I mean, we broke out. This chart went sideways, starting basically 2008 all the way into 2024, and finally just broke out. Actually started to break out in late 2024. We're up around 118 when I made this chart, but this chart is due for a rest, and I'll show you why. This is one of the charts. I think it's both in GDX in GDX and XAU. I'm not for sure, but it's one of the big ones. They had the big run up, and this is one of the reasons why GDX and XAU is probably going to consolidate. And here's the monthly chart again, but it looks at the smaller time frame. When you get about 80% above the upper Bollinger Band. Inner month this did, so you can see kind of it didn't close there, but it got above there. It got up to 125, and he gets that far away above the upper Bollinger Band. The market's really extended, and you usually get pullback of some sort, which it did, and then it goes back up and retests that high, and there you did. If you notice, the volume really dropped off, so you had a test of a previous high. So this shows, like XAU and GDX, is going to throw into consolidation. How big the pullback is? Well, basically support comes in probably around, looks like about 80-something, 85, 90 range. We may pull back there, we may not. I don't know how this consolidation is going to go. But it's going to consolidate for several weeks, if not longer. So that's one of the big stocks that I wanted to show. What's the next chart here? Okay. There's quite a few different stocks like AEM and GDX. All they're going to consolidate. So the generals are off the bottom. So what's starting to perform now is the juniors. Here's one stock that I actually talked about your show probably a couple of months ago, don't know. But this is the pattern that you should look at, I think, coming off of a low. This is a monthly chart, and it has a Bollinger Band on it. And the monthly charts rule the weekly, rule the daily, or the monthly charts rule the weekly charts rule the daily, and all the way down. So if you get the monthly charts bullish, everything below it, time frame wise, is bullish. So you got to get this chart in bullish category, and you get to get in bullish category, you need it to close above the mid-Bollinger Band with volume. So if you notice, I squared this out in volume. You can see what the volume is right here compared to the previous volume. It's huge. It came in, and that was buying pressure, but it didn't really turn bullish. I mean, the idea, you had a selling climax here, kind of ended the decline, but really, momentum's your friend. And you want to have momentum on your side. So the best way to do it is get the close above the mid-Bollinger Band. And you want volume to be high going above that mid-Bollinger Band, which it was. So this is this started last October, or actually this month would be actually November it really started. That's where the volume started to come in. And it's been volume-wise huge coming in here. The month of June was mediocre, but you got volume coming in, and you got to close above mid-Bollinger Band. That's all you need to have for this stock, and it's just in early stages. The monthly Bollinger Bands don't flip up and down. Once they start turning up, they turn up for a long time. They turn up for a long time. So this is a multi-month, if not a multi-year buy. How long it's going to last, don't know, but this is going to last for a while, especially with that much volume coming in. Let's look at another one. Here's another one that basically went sideways from basically 2022 or 2020 to 2025. And if you notice, I marked all the volume here. You know, you compare the volume. This is up volume, this kind of a blue area. Back in here, this is 2000, off the 2016 low. But the volume really came into the upside. So this is a sign of strength here. You had another sign of strength here. And we're having a sign of strength right now. And so you got the same thing. This is a monthly chart. This is MUX. Used to be a real high-priced stock. But if you notice, I kind of hand this in here, which is basically below this low. In other words, if you break below a previous low, for it to be bearish, you have to stay below that low. If you don't stay below that previous low, what the market usually does is take out the previous high. Well, the previous high is up in this area up here. And I think that's probably where we're going to go. We had a base that built the bottom for about 5 years. So it has a lot of cause for this market to keep going. And we're hitting I'm calling this a neckline right here. It's kind of a slanted down one. But we're hitting the neckline right now. To get through that neckline, you need a sign of strength. And if you can see, the volume's really jumping up here. We have 1 day, that was selling, or 1 month, we had a selling climax, and immediately started going back up. And volume's really a lot heavier compared to the previous volume days. You can see it's up, 25% more. So we're heading towards that neckline right now, and probably it's going to keep going right through the neckline. So this one's has just started to turn up, even though it's gone sideways since 2023. It's breaking out to the upside. So this one, even it's not a major. It's not a major. It's a low price issue. It's around it's $11. But this one's probably going to keep going. It's not going to consolidate. So I'm saying that the generals are going to consolidate. The soldiers, which I call this one, is starting to go. So even though the GDX and XEU may correct here, probably not this one, because it's probably going to keep showing a strength. Probably for another couple of months or so. But ultimately, I think we head to 45. It's around 10. I got some more here, I think. Or is that it? All right.
I think that was it. But man, those, I appreciate you going through the equities, especially, and boy, some of those names, man. Rob McEwen, of course, Gold Corp, right? And that chart, though, man, not forgot, but boy, it is wild. And I was jumping through whether it was, Newmont, Barrick, all these equities, man, the run and then the past on these charts. And McEwen, my goodness, man, that equity, you have it up to 45, and it was even up to like 100 back in 2011, and then came down to that same low, made it back up to $45. Just remarkable volatility on some of these equities.
Yeah, we're back into 2000 time frame, I think.
If you
these
folks
months are turning up. So
go look at some of those longer-term charts if you went around, because some of this volatility, it looks good while it's riding up, but, a healthy pullback might be right what it needs. Tim, I appreciate the update as always, man, and we won't talk to you Thursday. Markets are closed, so we'll talk to you after the 4th. Have a great 4th of July as well.
Right, thank you.
We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the S&Ps right now. That's your monthly. Let's put it back on a 5-minute chart. How about flat for the session? We just accelerate up to highs again at 62.60. We're just off that price level. NASDAQ 100, negative by 175. And yeah, how about NVIDIA? Off by $4.34 right now. You got Microsoft shares down by about 1 percentage point. Google shares down by 0.3%. Meta, 2.4 in the red. Tesla shares down by 4.6%. On the flip side of that, pick a Dow stock, right? Look at UNH, up by 4.3%. Home Depot, housing, up by 1.9%, although Home Depot gives back $6 from where they were higher this morning. Sherwin-Williams, looks like they're expecting housing and paint. Sherwin-Williams up by 3.8%. We jump back to yields right now. Yeah, 4.25%. Hey, 4.25%, man. This market will take 4.25%. Realistically, right? 30-year mortgages, usually about 2 percentage points above the 10-year. If we can get 30-year mortgages back to 2 percentage points above the 10-year, that would mean right now, mortgages should be approaching 6.25%. You ever start getting a 5 handle on mortgages? Watch out. in that market, okay? The home builders, KBH, KB Homes. And yeah, I'm going to find myself studying these things tonight, I think, because look at that last week, right? And look at the follow-through. Now, you're not going to get volume this week. You might do it when you average it out. But talk about building a base for a better part of 3 months. Down from 90, you build a base at 50. We're getting an acceleration. There's your sign of strength on their numbers. KBH, KB Homes up by 4.5%. We'll finish it with the home builders, man. Now, Lennar doesn't have the same volume there. We'll see if we can do it. You might do it this week, man. Lennar up by 4.5% right now. DR Horton up by 4%. They had volume last week as well. Look at the volume last week. Look at the volume April 21st. S&P's off by 2. All right, folks. Thanks so much for spending your Tuesday afternoon right here with me. Have a great night, folks. A safe night. We'll see you back here 9 o'clock tomorrow morning for the morning market kickoff. Have a great evening, everybody.
Building